The sectors of interest, we've done almost every sector there is to do. But for almost the last 2 years, we have been almost entirely focused on healthcare related. It includes, health tech, medical devices is a big part of our practice, life sciences, and health IT. Capital stage, we're looking at what we say is post-seed, where we're not the first dollars in the deal. We come in typically after friends and family, or maybe there was some kind of a seed funding or something like that. Series A is a big part. That's probably 80% of the deals that we do is Series A and Series B. For entrepreneurs, seeking capital can be a very difficult, frustrating, a lot of anxiety in raising capital. We believe that comes from primarily not having a strategy in place to secure the capital. So what you're trying to do here is avoid your capital raising effort as being some kind of a throwing the darts, chasing down people that you think might invest, as opposed to knowing that. We think there's 3 things that a strategy has to provide, a capital raising strategy. One is you got to know who you're going to approach. Who is, in 99 out of 100 times, we're dealing with equity investors here. So what types of investors should you be talking to? You should know that. 2 is you should know how they want to be approached. And the spectrum of that is pretty large. And then you should know what information or how or what to approach them with. And every group that we work with has very defined rules, guidance about what they want to be approached with, at least at this stage. So knowing those 3 things is pretty critical. Without those 3 things, it'll become very, very frustrating, a lot of wasted time, a lot of wasted effort. We've talked to companies that been looking for money for 2 years, 3 years, that kind of thing. Talked to a lot of different groups, but didn't really get anywhere. Okay, my partner, Mark Allen.
Go ahead. I'm the other half of K3. My name is Mark Allen, and I want to talk to you specifically about a couple things that typically, well, I'd say almost always get in the way of actually getting the money in the door. And as we said, one of the most frustrating things is raising capital, let alone even getting in front of an investor. But let's say you actually do get in front of an investor and it goes wrong, or something goes wrong. You've pitched 20 times. Why am I not getting interest? Well, I'm going to say a lot of things here that aren't typically said, but really should be said in our mind. In our opinion, I think that 95% of the deals that don't get funded, or the reason why they're not funded, is simply because entrepreneurs usually are not very well at interfacing with investors. They approach it more like almost a sales pitch or a technology pitch. What they usually avoid almost all the time, or don't even understand, is what's the motive of the investor? And for all intents and purposes, most investors, they're not looking to be your friend, they're not looking to be a charity, and they're certainly not looking to gamble. And by the way, when I talk about this, I'm not talking about friends and family or a presentation like this. I'm talking about a third-party investor who you've never met on the phone typically, or if you're in front of an angel group presenting. So knowing what the investor is really what they want out of it, it boils down to, well, they want to turn money into more money. And presenting it as such, presenting a deal that's going to be lower risk, high benefit, high reward, high opportunity, is what you need to speak to more so than how my product works. So sales 101 is people don't buy a product. They buy the benefit of the product. And in a scenario of investment, they're buying you. They're buying the management, the product, the team, the opportunity, and they're pulling it all into what we call the deal. So spending 30 minutes talking about just your product is maybe a waste of time on the first phone call. So what I'm talking about here is not going to be your entire pitch, but it's certainly going to be some key points you shouldn't miss or certainly should be able to speak to when asked. Number one, you are not special. And inventors, scientists hate when I say this. And it's really not meant to be offensive. It's really just meant to be more, put some reality, give you some reality. For any kind of investor, especially funding groups of VCs or angel groups, they get 20, 30, 50 deals per week. They've seen it all. So you talking about changing the world, well, they've heard that a million times. They want to know more about, okay, what is in it for, what's the opportunity about? Let's get to that. Certainly things to hit on is what is the market applicability of your product? How is it going to be used? What's the landscape? What are the pain points? Why would someone want this? And that question is never, it was actually, I would say, rarely answered. And this is particularly important in the physician field. As Yuli mentioned earlier, physicians are constantly bombarded by new technologies. And if you're presenting something that has great opportunity and such like that, well, I guarantee you the investor's going to say, well, I know a lot of physicians and they work like this. Are they going to buy it? Is the hospital going to buy it? And if you're not able to answer that effectively, well, you've lost a lot of traction. The number one problem that we hear from all fund managers or investors is that entrepreneurs fail to answer the question, what is in it for them, meaning the investor. Talking about what's an appropriate return? What is going to be your exit strategy? Things that mean, okay, well, how am I going to get to that more money in my pocket, the ultimate goal of investing? And failing to hit that point, especially on a one-on-one conversation, is, well, it's not going to make you, it's not going to leave them with something to really bite on. And I guarantee you, if you do hit that point, you will stand above 99% of other people, of other pitchers they heard that week, because, wow, okay, he actually understands why I'm trying to do this. Really, thank you for your time here, and it's very appreciative. Answer some questions?
It's maybe a really basic question, but other than making more money out of the money, what are the other motivations for an investor that we can look for? Like, what are you personally looking to get out of it, other than monetary benefits?
Sure. The question is, what other items or factors motivate investors? And by all means, yes. Some investors I know, they only invest into, or they're really motivated by, does this product make a social impact? Can it help other people? Can it help the community? And that does, of course, fall into line. But all I'm getting at is, at the end of the day, is, if I'm going to put money in here, do I plan on getting something back?
One more question.
How do you factor in, so post-seed, Series A, even then, a lot of companies have maybe not hired a CMO. Mm-hmm. They don't have a research strategy. They're not quite sure what their total accessible market is going to be based on that. How do you compensate for that lack of insight?
Probably 99% of the companies we work with do not have that information when we meet with them. And this is with some companies that have already raised $40, $50, $60 million, much less companies that raised $1 million, and they're trying to do this. Highly common that companies don't have that kind of information, primarily because they're coming out of highly technological backgrounds, and they're viewing the whole project through technology. And a fundamental question is what you just asked, and that is, what's the research in the market, et cetera, et cetera, et cetera. It's some of the things we provide when we work with companies, or some of the things that we can acquire.